Our modern understanding of wealth often depends on physical objects, paper in a wallet or coins in a jar. If those objects vanish, we feel the entire system of value would go with them. Thousands of years ago, the cities of Mesopotamia grew into sprawling urban hubs. These were centers of intense trade, where merchants moved massive quantities of grain, oil, and livestock between the Tigris and Euphrates. This massive economy functioned for centuries without a single piece of paper currency. Even standardized coins were still a distant invention. Maintaining an urban civilization requires more than just hand-to-hand bartering. To manage resources on this scale, these early societies had to engineer a completely different way to track value. The need for this system began in the fields. A farmer needs grain to plant and supplies to survive today, but he won't see a single grain of profit until the harvest arrives months in the future. This delay between labor and reward created a gap that only credit could fill. It allowed people to obtain what they needed immediately, based on a firm, recorded promise of future payment. Because human memory is fragile, the survival of the agricultural cycle depended on a technology that could accurately track these promises over time. The Mesopotamians turned to the riverbanks for a solution. They began recording debts and agreements on tablets of wet clay. These tablets were meticulously organized. Scribes used reed styluses to create columns and rows, detailing names, amounts, and due dates. These wedge-shaped marks function as individual data entries, allowing administrators to track balances with the precision of modern accounting software. By recording this data, value was no longer limited to what you could carry. It became a recorded state of trust, stored in a physical database. As the system scaled up, the city temples became the primary engines of the economy. These massive complexes dominated the skyline and the local markets. Temple administrators managed vast resources for the city, including massive storehouses of grain, communal herds of livestock, and thousands of acres of land. With this concentration of capital, temples acted as the primary lenders. They provided the seeds and silver necessary for farmers and merchants to begin their work, ensuring the city's economic cycle never stalled. By managing large-scale resources and tracking debts for the entire community, these temples served a role remarkably similar to a modern central bank. Over time, lenders recognized that the use of their resources had a price. They began charging interest on loans of grain and silver. By charging interest, a lender could see their stockpiles of grain or silver grow through the terms of the contract itself. This allowed wealth to expand as it moved through the economy. However, basing an economy on clay records creates a risk of fraud. To protect the system, they needed a way to verify that a tablet hadn't been tampered with or forged. The solution was the cylinder seal. When rolled across wet clay, the seal leaves a unique, intricate design. This acted as a secure personal signature, providing a way to authenticate a transaction and verify the identity of the person involved. With the addition of interest and secure authentication, a simple recording tool evolved into a sophisticated financial architecture. By the Babylonian period, commercial activity had reached new levels of complexity. The grandeur of the city reflected a massive increase in private wealth. The financial tools once reserved for the temples were adopted by private merchant families. They began running dedicated business offices, keeping their own archives of debt and credit. These private citizens used ledger-based wealth to finance international trade networks and buy property, building fortunes that spanned multiple generations. While the temples remained powerful, these private offices proved the system was versatile. Credit and ledger keeping had expanded into the hands of the wider commercial public. Contrast the weight of a Babylonian merchant's clay archive with the digital weightlessness of a modern banking app. Those figures on your screen represent your position in a vast digital ledger. They are records of what the bank owes you, updated instantly with every swipe or click. Your phone has replaced the clay tablet, and your biometric password has replaced the cylinder seal. The Mesopotamians didn't just find a way to trade without coins. They engineered the foundational architecture of trust that allows the global economy to function today.